Welcome to My Money Mindset podcast, where we explore how a healthy mindset is the foundation for financial success. Each week, we delve into mindset hacks and practical strategies to help you enhance your income, help you make more appropriate investments for yourself, and to improve your overall financial well-being. Join us on this journey to transform your financial future by transforming your mindset. Please note that the information provided on this podcast is for general information purposes only and does not constitute as personal, financial or health advice. It has been prepared without considering your individual objectives, financial situation or life needs. Before making any financial or health decisions, you should consult with a qualified professional or financial advisor to ensure the information aligns with your specific circumstances. So let's begin and enjoy this journey as each episode teaches us on how to improve our overall mindset that overall improves our financial success. Hello everyone and welcome to a new episode. Today I'm going to talk about mental health and investing, how mental health is in our lives today so prominent. Even if it's not affecting us, it is affecting our loved ones, our family, our friends, the people we work with, stuff like that. Everyone is connected to someone or somebody that is actually affected by mental health. And mental health isn't necessarily to the extreme. It could also mean slight cases of depression, anxiety, all that sort of stuff. There's bullying going on. It creates anxiety. There's so much stuff out there today in our social world that has created an issue or a concern about mental health. Thus, it affects the way we look upon investing, being entrepreneurs, what we want to do with our life, and so on and so forth, right? So mental health and investing are somewhat very, very important. I think this episode would be fantastic to be able to share to loved ones. They may know someone that is affected by mental health, and it could be short-tailing their life upon advancing forward. So what we often find is people that are affected by mental health are often left behind in the investing side of things or the entrepreneurship, and even if they are advancing and pushing beyond their mental health, they still sometimes get bitten behind from certain issues of concern or anxiety, and it affects their investing potential or their investment performance or their business performance, right? People start a business, they're pretty confident, then all of a sudden anxiety, things go on, bad relationships, whatever it might be, life just gets in the way, right? So they get affected and it affects their money earning income potential and investment potential or entrepreneurship, right? So when it comes to the intersection of mental health and investing, there are so many critical factors that we've got to consider. Managing our mental health today is a vital role in making sure that we just don't make irrational investment decisions, right? Once we've got it down pat and we feel as though mentally we're well balanced, investment decisions come a lot easier. So keeping that in mind, there are some key points that I just want to go over in this short episode. The first one is emotional decision making. So pretty much is fear and greed. Fear and greed is something that understanding our emotions, how they can really impact our investment decisions. If we don't know something and we fear it, or when we fear something, it's often, I always state that it's probably because we're not enlightened with what is actually going on. Like I use the analogy of the fear of the dark, and then you put the light on and you realize there's nothing in the dark room, and the light has been shined on to make sure that you no longer have to fear anything, right? And the same goes for understanding something. If we fear stuff, so we're fearing becoming a business owner, becoming an investor in property or shares or whatever it might be, it's probably because we need to increase our what we know of what we're going to invest in. So if your fear is, oh look, the economy might go bad, it doesn't mean that you've got to become an economist. It just means that you've got to find out certain things of why you fear that the economy may be going bad, or it may be improving, or it may be, not a place to invest in, a suburb or whatever that may be. So investigate what your fear is and work out exactly why it scares you to do something. Now, fear is also a positive thing, right? It protects us. Fear makes us alert and everything. So don't necessarily think that fear is something that is affecting your mental health, as in perspectives and stuff like that. Fear is something that can be used as a tool to accurately measure whether an investment or a business or a relationship is worth pursuing, right? So fear, where I'm going with fear is that it can lead to panic selling, panic buying. I just don't know what to do. I'll better just sell it, or I better just buy it, or something to that degree, right? So the control or understanding of where your fear derives from will help you with your decision making. Where greed sometimes might sort of drive you to make unnecessary risks. So what I mean by that is, doesn't mean greedy that you want to be this person that just wants everything, right? It could mean that there's an opportunity out there that you think, oh, if I don't take it now, it's a great opportunity. It could be a career move, could be a new job, could be a new business, could be you want to start a business, you've got an idea, you reckon it will work, could be a house down the road that's going cheap and you think, hey, you know what, I'm going to make a lot of money out of this and then flip it or whatever. Greed can sometimes sort of drive you to make those sort of unnecessary risks. So if there is something, an opportunity too good to be true, once again, take a step back, work out the micro little points or the pros and the cons, yeah? Just don't allow your emotion of greed to kick in there and break it down. Recognizing these emotions can sort of help you make more rational decisions, and that's fear and greed, right? So overconfidence bias, sort of never be cautious of overconfidence in your abilities. Don't always think that, you know, you're really good at something and God bless and so on and so forth, but overconfidence can really sort of, you've got to be really cautious of it, because after a few successes that you do have in life, it can sometimes affect or lead to poor decision making. So what I mean by that is sometimes we're on a roll, yeah, and things are just smoothly going. There's no friction, but sometimes without friction we slip, and that goes for investing, entrepreneur, business decisions. I've seen quite often in a lot of the time when I speak to a lot of my clients and I mentor their businesses, that they find that things are going so well, they're picking up clients, you know, it's awesome. Then all of a sudden they're overconfident in a lot of the decisions they make, and it can sometimes lead to, you know, bad times. So just be very, very, very wary of that. It takes me to handling stress management. Stress management is something that we really want to keep an eye on. So your stress often comes from overworked, right? Or too much work, or too much on our plate. The day is not enough hours in the day. Too many commitments with the kids, with work, with business, whatever it might be. The investment's not going as well. So this creates a lot of stress. So make sure you keep an eye on that, not just for your mental health, but also your physical health, right? Because stress is directly related to how your body will be feeling, right? So keep fit. Keeping fit often helps with stress. It's sort of, as investing can be a source of anxiety, right? So as investors or entrepreneurs, we sort of get stressful in moments, and it may not be that you're continually stressed throughout the day. It means that you could be continually getting stressed over certain investments and stuff like that. I don't necessarily always say, oh look, you know, a little bit of stress can sometimes be good. It pressure tests us as people. So it's sort of like breaking the mold to the next step. But over stress management, you know, being confident, once again, going back to overconfidence, and saying, oh, I can manage my stress. I know how to do it. Sometimes we just, you know, can overstep it. So make sure you look after your stress levels. Work-life balance is probably a really good one. If you manage your work-life balance, you can really make sure that you sort of manage your stress levels. Always ensure that when you're investing, it doesn't consume all your mental energy. So as investments, right, let's say you're working day in, day out, but you've got to focus on your investment. It sort of drags you away from your everyday sort of stuff. Don't get overly involved with it. Then you come home and then all of a sudden you're on the investment side of things again. It could be a second business, whatever it might be, right? But you definitely want to make sure that you've got the work-life balance down pat. Especially we're focusing on mental health, so really make sure you do that. A healthy balance of work-life balance can actually make your investments or decision-making process a lot clearer, and definitely create a more focused mindset for that matter. The third one is also education and knowledge. Yeah, I harp on this all the time, but and I don't mean you've got to be professors of whatever it is that you want to become an entrepreneur in, investments or businesses or anything like that. What I mean is a lack of knowledge often leads to anxiety. Educating yourself about the markets, investment strategies, the risks that are involved can also help control and make you feel less stressed. It's just it is that, right? Once again, don't have to become a professor of anything, right? As they say, jack of all trades, master of none. But that being said, it doesn't mean that you're overwhelmed. So education, keep in the loop and make sure your knowledge is sort of somewhat always refined and updated. With this ever-changing world, we've got to update all the time. Continuous learning is the most important thing, I think, especially for business owners, innovating, all that sort of stuff, right? So investment, look, the investment landscape is always evolving. Making sure that you're informed with everything and up to date with the market trends. Economic indicators doesn't mean you've got to watch every point of news there in the background and become over obsessed with it. New investment opportunities, all that sort of stuff. So it's good to be able to be in a circle of friends, or it could be bantering with people that are often within the same investment criteria or business industry or anything like that. Similar to that, what you sort of focusing on is also helps. Number 4 is setting realistic goals, whether they be long-term or short-term. You want to consider your financial goals and your timelines. Like, set them, make sure they're realistic. Don't go, look, I'm going to, make a whole lot of money in a quick amount of time and all that sort of stuff, because achievable goals can often reduce anxiety. So if you over sort of stipulate your goals, like if you think, I'm really going to be able to do it, you're just creating anxiety, and you really don't want to do that. It's sort of, when I say setting realistic, achievable goals, they can reduce anxiety associated with short-term volatility in the markets, out of your control, or whatever is not in your control or is in your control. It still can be reduced when you do set realistic goals, right? And diversity of goals. Don't always think, having a range of investment goals for some long-term security and others short-term. Just don't think that one is long and that's all you're going to focus on. Have a diversity. That often helps help you feel as though you're getting somewhere with the short-term goals and achieving them, but then the long-terms lead to the short-term lead to the long-term goals type of thing, right? And it's sort of, I think the short-term goals, even if they lead to the long-term goals, the short-term gains that you accomplish, or those goals, they keep you focused and motivated to get to the long-term goals, right? Number 5 is about mindfulness and reflection. So what I mean by that is regular assessment of, take the time just to assess your financial situation and your investment strategy. What you thought of 10 months ago, 10 years ago, may be different to who you are today. So assess your financial situation, see that you are slowly advancing or going really well, or your business or relationships even, right? And just take an assessment on that, especially your investment strategy. Mindfulness sort of practices can often help you remain objective and reduce stress. So always making sure that you're keeping your finger on the pulse, right? I often find that journaling helps with this, as in writing things down. So keep a journal of your investment decisions, how your emotions are associated with those decisions that you made, that you journal, and market developments to reflect upon patterns over time. That often helps. So journaling enables you to be able to reflect and see where you may have improved upon in certain things, or may have sort of tripped up on, that sort of stuff. So it's quite important. Number 6 is about support networks, making sure that you've got a good mentor, or so you surround yourself with mentors or with knowledgeable individuals who can often guide you and support you. Engaging with a mentor can help you make really good decisions, and it doesn't mean you've got to just live with them or always speak with them. It just means touch base with them every now and again, especially if you're struggling with anxiety or depression relating to investment. Consider seeking support for that, because that's probably most important. And that from mental health professionals, that is their livelihood, right? They deal with this every day, and there's so many good ones out there that you could actually reach out to if you find that mental health is affecting what you're doing and your wellness. So that leads me to financial wellness, which sort of relates to having an emergency fund. So always make sure that you've got emergency funds in place. Nothing worse to create anxiety and stress when you're running out of funds. So this can really provide peace of mind when you've got an emergency fund, or what they call a float, or some residual cash in the bank, or whatever it may be, to help you avoid making impulsive decisions during market downturns. So let's say, for instance, if you've got a large float in your offset account for your investment property, or cash reserve, or for your business, that sort of stuff, sort of not really scraping the bottom of the barrel in cash wise. Always make sure you got an emergency fund. If you really want to discuss that, make sure you do speak to a financial professional regarding that, and what that emergency fund, how much it should be, so on and so forth, right? Everyone's different, everyone's investment potentials and criteria is different, so you definitely want to make sure you speak to a professional there, or professionals, sorry. And make sure that your financial literacy, as in understanding on what budgets, debt management, overall financial wellness, how that reduces your stress and it helps you feel more secure. So financial literacy is sort of working in with your accountant, and that doesn't mean you've got to become an accountant or a financial planner by that means, but it means that you are understanding their terminology and stuff. Number 8 is about understanding risk tolerance. So we're all different when it comes to risk. Our tolerances are all different, and we've got to make sure that we really make a personal assessment upon ourselves. So recognize our risk tolerance. My risk tolerance may be different from your risk tolerance, and so on and so forth. If we're speaking with someone and they go, nah, just do it, or no, don't do it. Yep. That because their risk or their lack of education or whatever, make sure that you recognize your risk tolerance and invest accordingly to avoid that undue stress on you, right? You are you, and you know yourself better than anyone else knows you in most instances, right? So you understand your risk tolerance. It varies from person to person, right? Based on mental, emotional, financial capacity. It's just one of those things. So really understand it, and keep a finger on the pulse there. Review your investments regular. I always say this: review your portfolio or your savings capacity or your business to ensure it aligns with your risk tolerance and personal goals. Nothing worse than making a business going out of hand where you're sort of looking around going, I don't know where this business is going, but it's going well, but I really don't know what's going on. You collaborate with your advisors, your professionals in your life. Make sure that you always review your investments. If they're performing well, why they're performing well. If they're performing bad, why they're performing bad, and act on that, right? And always, number 9, always avoiding burnout and take some time off, right? Holidays, God. I think we're all put our hand up here to say that we love a holiday, but especially some of us can really be overdriven where we don't take the time off. Take the time off, guys. If you find yourself overly consumed by investing and working and making money and that sort of stuff, no good really. It's good, don't get me wrong, but take breaks to avoid burnout. Burnout is terrible. It's one of the major leads to stress, burnout, mental health issues all over. So make sure downtime can lead to a better decision-making process in the long run. Trust me, it's just one of those things where you've got to know and read the room, take the time off, diversify your interest, right? Engage in other things, hobbies, gardening, cooking, whatever it might be, cycling, jogging, whatever, meditating, love it. Activities that bring you joy from outside of investing. Keep that balance, yeah? Balance that, and it keeps your mental health in a balanced perspective. And last but not least is technology and its impacts, right? So limit exposure. Be mindful on how much time you spend on financial news and social media. Don't think that the more information that's overwhelming sometimes. Really make sure that you constant exposure. It can sort of amplify anxiety because you're reading from journal to journal or whatever it might be, or feed, and you're going, what the hell? Like, there's too much information. Just because it's there on a screen doesn't mean your brain has the capacity to take all this information. And a lot of us sort of think, oh, gee whiz, I feel like I'm not being able to keep up. Take the time, limit your exposure. Just really be mindful on the time that you spend on all this sort of stuff, right? Use your tools wisely, right? I'm not saying don't use technology, but use it wisely. Leverage technology like apps and platforms and CRMs and stuff like that, right? They help you track your investments, but set boundaries to avoid the information overload. Don't always think that you've got to be on it that much. Take steps. Just use your tools wisely. They're there for a reason, and they're really good when they are used properly, but use them wisely. I hope this helps, guys. Look, by integrating mental health considerations into your investment strategy, I think it's one of those things where you can foster a more balanced approach, and then it will always, or most of the time, may lead to a better financial outcome, and especially personal well-being. So I really do believe that these are sort of the 10 foundations to mental health and improving upon investments, business decision making, that sort of stuff. Please share this episode with anyone that you feel that could take a bit out of it, find a few little gold nuggets somewhere in that information, and let me know if there's something that I've missed, and look forward to seeing you on the next episode, guys. Thank you.